Peter Schiff, known as Dr. Doom, is an economist and financial broker-dealer known for his forecasting of the 2008 financial crisis. He believes that the bubble that we have now is larger than the one that popped in 2007-2008, and that the only way to make home ownership affordable for new buyers is for prices to come down. The Fed funds rate is currently at 5%, and to bring down inflation, we need to see a contraction in credit expansion. The national debt is unsustainable. The U.S. has defaulted on its promise to pay gold for Federal Reserve notes, and if the U.S. defaults, the world dominancy of the U.S. dollar would be at risk. Investors are undervaluing gold due to their belief that the Federal Reserve will return inflation to 2%, which will push up the dollar and hurt gold prices. Investors are creating a bubble in housing, leading to a high inflation environment with negative real interest rates and potential hyperinflation. To bring down inflation, consumers need to see a contraction in credit expansion, but credit is not expanding and consumers are not saving more and borrowing less. Interest payments on the national debt are expected to reach $1 trillion a year by the end of the year, making it impossible to finance the debt. The speaker is questioning why the US dollar is so strong and why gold is only at 1838, and how much faith people have in the system. Silver and gold are both an alternative to the US dollar, but investors are undervaluing them due to their belief that inflation will return to 2%. The Federal Reserve's actions following the 2008 financial crisis have set the stage for the crisis that is coming, which is going to be much worse than what would have been had the Fed not intervened. The year-over-year CPI increase is more than 5, which means negative real interest rates are needed to fight inflation. The speaker questions why the US dollar is still so strong and why gold is only at 1838. Silver and gold are both alternatives to the US dollar, but gold prices are still low due to investors not understanding the situation. Peter discusses the parallels between the subprime market bubble of 2007-2008, and suggests that the housing market may be hitting a wall at some point. The housing market is the most impacted by the inflation debate, as it has negative equity and can't sell with the mortgage attached. The Fed may hike the Fed funds rate by 50 basis points at the next meeting, but even if the government inflation numbers are higher than 5, the PCE is an even less accurate way to measure inflation than the CPI. The national debt is expected to reach $1 trillion a year in interest payments by the end of the year, and the U.S. debt ceiling may have to be raised by June. The U.S. dollar has lost 99% of its value since 1913, leading to a decline in its purchasing power. Investors are making the same mistake as with subprime mortgages in their perception of the value of gold, believing the Fed will return inflation to 2% and push up the dollar. Peter Schiff argues that gold is an asset that is not also somebody else's liability, and recommends buying gold and silver before the price goes up at Schiff Gold to make a profit from the next bull market in gold.